Hello and a very warm welcome to the brand new edition of Policy Watch. I'm Kriti Mishra. The draft legislation on the new direct tax code has been submitted to Finance Minister Nirmala Sitharaman. The task force, headed by Principal Chief Commissioner of Income Tax Akhilesh Ranjan, was constituted in November 2017 to review the existing Income Tax Act. The committee reportedly has proposed several far-reaching changes, including significant relief for taxpayers, across-the-board tax rate for both local and foreign companies, and changes in personal tax slabs to benefit middle and upper middle class Indians. The draft code also proposes incentives to startups and a new concept of settling disputes through mediation between the taxpayer and a collegium of officers. The government will release the report in the public domain for consultations after examining all the recommendations. And to know more about the topic, I'm joined by Dr. Subhash Chandra Pandey, former Special Secretary, Ministry of Commerce and Industry, Mr. Jain, former President, Institute of Chartered Accountants, and Dr. Arvind Virmani, Chairman, EGROW Foundation. Welcome to Sabha Television, all of you. Mr. Jain, let me come to you first. We had around 700 sections in 6-decade-old Income Tax Act. Tell us about the relevance of new direct tax code.
Kriti, you understand that this 1961 Act was prepared and enacted after the independence, almost about 14 years after independence. And it was drafted and enacted considering the stage of economy that India was placed at that point of time and the thought process that was prevalent at that point of time, how one income should be taxed. Because there are different ways of thought process, also taxation of an income, progressive, regressive, on that basis. Now, down the line, after 58 years, so much water has flown in the way the economy has world over developed, globalized. India has also liberalized a lot, and now the world is one on this way. And there are so many new models of doing business, commerce, the way it is done have been developed. So the act has to be redrafted and to look into how Indian economy is going to be in the next 50 years. Because this act, which is going to be enacted based on this report, will be in, I believe, it will be in operation for the next 50 years. So one has to be very, very great visionary to look into that, how economy is likely to shape in the future. And from that economic, how we should tax the income so that there is enough money in the economy for future growth and development. At the same time, there is enough money with the government to run the government that way also. For not running the administration, but also for the various social welfare scheme, etc. So looking to the Indians demographic and the Indian population of this such a large scale, so there has to be a balance struck, and that's why this draft report has to take into account all those issues of the economy. This is one. Then this draft report has to take into account its long experience, how this 1961 Act in administration has worked, how it has helped the taxpayer, how it has helped the tax administration, what complexities the taxpayers are facing, what issues the tax administrations are facing, how to ease it out. Thirdly, the technology developed. 61, we were all physical. Everything was in writing paper. Computers were not there. By and large, typewriters used to be there. Now there is a computer, there are digital information. There is so much information available on internet. There is social media information available. How you are going to cope with and how you are going to use that technology to its advantage. It helps the tax administration in collecting taxes. At the same time, it helps the taxpayer also in working it out and working it out. And then the way the business is developing, how to tax that also. International business, country, how the relationship has to develop, all those issues have to be taken. And another important aspect has to be that in Indian tax system has been, the litigations have been, I believe, the highest.
Yes.
Looking to the developing nations, the number of India has been quite very big. Now there has to be some mechanism and some lessons have to be learned from the developed country where the litigation on tax issues are not so high. So there has to be a process, how do we reduce the litigation? Because when you interpret the tax law, there is bound to be some issues on interpretation and confusion. So how to settle those disputes, mediation, settlement, negotiation, so that we are able to move forward, and corporates at the administration is able to move forward and do not get stuck up, where we find that after 20 years, one judgment is coming from the apex court, which is changing the whole complex, how the business has been developed, how taxation has been there. So that mechanism has to be developed. So I am quite confident that this panel, which was of eminent people, they would have taken care of all those points which I have raised, and they would have given a recommendation. At the same time, that the panel has to look into the corporate and the individual tax rate also, because the taxpayer ultimately has to look into that. And there, I believe, the challenge arises to the, tax administration as well as the taxpayer Our taxpayer obviously want the tax rate to be reduced, but at the same time, the tax administration and the government want more and more funds to run the country and to finance the various social schemes. So that's a challenge which I believe when we get to a full report, we will be able to know how they have been addressed.
Absolutely. So let me take that point to Dr. Virmani. Dr. Virmani, we're talking about relief to individual taxpayers. But do we have fiscal room for that kind of relief?
See, actually, the administrative and legal aspects have been addressed. I want to address the economics because that was one of the fundamental drivers. I mean, I was involved in it when I was CA. Basically, you got to remember that, you know, tax economics has developed as a field since independence. Many of the things have not only been tried, they've been experimented with all across the world. And the whole tax economics is a special field now. And it's a well-developed field. So, you know, as was said, that the situation, the external environment has changed, so has the knowledge of tax economics. So that's a big fundamental change. And given that, the second point is that the code was developed with amendment upon amendment. So, you know, new things came up, the point which was already made, and the whole structure is like a house, you know, with rooms being added all over the place as things were seen and developed. So the idea of the code was to just go down to basics of, given our economic knowledge, given what we have seen in India and the world, and devise the simplest code possible. So that is the basic economics of it, which is rational and simple. The issue of exemptions and rates is kind of on top of that. So what tax economics tells us is that very few exemptions have worked permanently in the world or in India, you know. So that was a fundamental issue which had to be thrashed out. In fact, the basic stuff was more or less clear to us, you know, when I left as CA.
Yes.
But what was not clear was the exemption part, and that debate actually has taken, I would say, because it's inherently a little political, you know.
Yes.
So things got postponed. So that is the second thing. And the third thing is that rates actually are not an issue of a code. You know, rates have to be defined by rules and budget. So I would actually slightly disagree. You know, one can have a philosophy or an approach which, for example, integrates corporate taxation with personal income taxation. And this is one of the issues in economic theory. But you cannot specify rates. You cannot bind all future parliament. So I would say that has a different plane. The committee can give some views. For example, it could say that all over the world, more than 50% rates have never worked. So it should not be above 50. But they can't say it should be 20 or 30 or so on. So that will not be actually, I think, the basic stuff about it.
So, Dr. Virmani, what will DTC mean for individual taxpayers?
The biggest thing should be simplification. For example, you know, you may know, I fill my own returns. We have to file our returns by the end of the month. It is really an effort which goes into it. So hopefully the code will make it so simple that one could basically have a little Excel file, put in a few numbers, and of course we've got that seeding thing will be much easier. If you remember, in the budget, the finance minister, which was a very important thing from my personal perspective, that they will have automatic seeding. Now that becomes very, very simple once you simplify the code. So perhaps the former secretary can tell us more about the impact on individuals.
Absolutely. So the focus is on the simplification of the entire taxation process. But also, Dr. Pandey, in a country of more than 1.2 billion, only 74 million people are effective taxpayers. How would DTC expand the base of taxpayers?
You see, the expansion of tax base is essential to meet the fiscal targets, and to that extent, I would like to carry forward what Dr. Virmani said about the macro context of tax economy. You see, from the early days of early 70s, when we had maximum marginal slab rates of more than 70–80%, it has come down to maximum 30% when in 97–98, and since then we have seen steadily the direct taxes growing steadily and healthily year after year, and that has been one of the most successful aspect of public finance reforms and fiscal reforms. But the tax GDP ratio is still a cause of concern. Till in 90s, we had a gross tax revenue of central government was about 10% of GDP. It peaked to 12% of GDP in 2007-8, and then again slided back to 10% by 2013-14. Thanks to the effort in last 5 years, it has again crawled back to 11.7% today. But it is still not enough to, and the central government expenditure is 13% of GDP. If we add states, it will be about 27% of GDP. So 27% of GDP expenditure, public expenditure, is not the level of development that we would like to see. We have to enhance it. And the other macro dimension that is added to from previous decades is that we are much more now integrated with the rest of the world, both in terms of trade and investment, and capital account convertibility is there. Mobility of capital is there. Tax competition among countries is very intense. So, apart from domestic, there is also an international context to our tax policies. You have to rationalize that. And then the third macro dimension is that traditionally, for the sake of administrative convenience, we have focused on simply on ability to pay. The tax law seldom tries to differentiate between high risk income, low risk income, legal income, illegal income, non-recurring income, recurring income, and these nuances would mean bringing differences which will be little more difficult to administer, but they will bring more equity in the system. The current discourse when we say wealth creators should be respected, they should not be harassed, they should not be viewed with suspicion. So, we have to provide an atmosphere where those who create wealth get special consideration. Those who earn interest from government securities or salaries from government, they are the most secure sources of income, and for them to be treated at par with say high risk business income or shareholders income, which suffers triple taxation for high shareholder. These anomalies once we address, I am sure the tax base will increase, because when the cost of tax evasion and the cost of tax compliance, the differential is not very much, you can move people to migrate from a regime of tax evasion to tax compliance. So from the practical aspect, the faceless assessment, randomized, anonymized interface between the assessor and the SSC will help. Information sharing will help, and ultimately, as we have seen in last 20 years, almost 85 to 90% of tax collection is through TDS, TCS, and voluntary compliance. So the enforced compliance through raids and all that, it's very little. So more and more we use technology and psychology, we would have succeeded in our efforts in creating a taxpayer-friendly administration.
You mentioned a very pertinent point about faceless assessment. Let me take that to Mr. Jain. Mr. Jain, the draft talks about, there are reports that it talks about faceless assessment. What is faceless assessment and how does it function?
See, the faceless assessment is in operation for the last 2 years. I think in 2017 it was introduced. The faceless is that one need not appear before the assessing officer or a tax officer. There will be an email sent to it that this is the information which is arising from your tax return, and you need to submit a reply or your evidences in support of the income, whatever issues are arising. And there is no movement, physical movement of any document, there is no physical movement of any persons, and you do not know who is the tax officer who is looking into. The faceless means because you see that in tax department there have been various issues coming up on this issue. Okay, that when you go to tax officer, you are harassed, there are temperamental issues, there are ego issues, there are other issues. To avoid all this, it has been proposed that it should be a faceless assessment, which we call e-assessment or a faceless assessment. You do not know. I am sitting in Delhi, I file my tax return. One fine morning after 1 year, I get a notice, look, Mr. Jain, you have made so much investments here, I will need evidences from where this money has come in. I do not know from where it is coming. It may come from Bangalore, it may come from Pune, some person has written, computer generated. I send my reply It goes to a person, I do not know where he appraises my reply. If he is satisfied, he closes the file. If he is not satisfied, he further puts a question, this information is not self-contained, you need to provide some more specific information. So I submit the information, on that basis it is done. So I believe in this era of computerization and digitization, this is very, very feasible and very, very practical also. And this will reduce a lot of pressure and a lot of issue which has arisen with the tax administration regarding the assessments where people have made various allegations, etc. So this takes care of that issue also. But coming to the issue which is a direct tax code which is now going, as I said, this is going to be in operation for the next 50 years.
Yes.
I just take a cue from Mr. Virmani what he said. We had an act in 1961. It was just like a land and we built a house. Thereafter, over a period of 58 years, we go on adding some rooms here, some bathroom here, some other thing here. We removed one thing, we added something like this. Now we are having a 2019 Act. There are two options. We still make some renovation, or otherwise say we will raise the entire infrastructure as on date now today, and we will build absolutely a new house which meets the expectation of today and look into the requirement for the next 50 years. If you want, I want to construct a house, I will like to make it sure that I have all the modern facility which are normally available in the house. And also look into that in future in case communication is required, some other things are required, so there are NF conduct pipeline, the sewer line, etc. I believe that this act of 2019 has to have the same vision, that I need to have absolutely a new structure which meets not only the today's expectation, which also has a vision what the world is likely to be in the year 2069. I must be able to visualize today and see, yes, this act will take care of the situation, subject to certain small modification which may be. It may not happen that we come with a code and then thereafter, year after year, we go on again changing. Coming to the issue of the tax rate, I agree with Mr. Virmani on that point, that it is very difficult for a government to prescribe the rate for all times to come.
Absolutely.
Why we have a tax rate every year in the finance bill? We have a convention going on from 1914.
Yes.
The reason being because the country need fund for particular year. So you first estimate the expenditure and then you try to find out the resources from where the money has to come. And then you plan it out that who can pay a little bit more or who can pay a little less to reduce it out. So that's an important aspect which one need to take care of it. Though direct tax code is likely to prescribe, but direct tax code can definitely lay down the principle on what basis the tax rate will be decided. Because as one of the recommendations which we are getting is, I believe, in the which may not be not in public domain, but otherwise as we read the press is that surcharge is proposed to be abolished. Cess is proposed to be abolished. That's an issue. Then the principle of taxation, that minimum alternate tax, that need to be abolished. How you tax a corporate, whether you want to tax the corporate independently and then you want a corporate to pay dividend distribution and then you want a shareholder to pay tax. That proposal has to be worked out. No, our policy will be very clear. Company need to pay one tax and thereafter no tax. That's a
So the government has to make a very calibrated move. Dr. Virmani, you wanted to make a point.
2 points here. One is the very correct point that you have the opportunity now of building a system for the future, and that is what revolutions are about. It's when we say big bang reform, here is an opportunity which really doesn't affect negatively too many people. There are many reforms which have in the first few years negative reforms. I cannot see any big negative from this, so it's a golden opportunity. The second thing is that some of the things which has been mentioned are really part of the what we have learnt about tax economics, like surcharges, cesses, it's all. Nowhere in the world does any tax economist recommend these things. So this is the time to kind of get rid of them. Third, and part of that, the structure. Yes, the structure can be defined, that if we'll have 3 rates or this will be the basic exemption or deduction, that structure can definitely be defined in the code. What I was only referring to is the rates itself cannot be in a code. It could be an addendum as rules even in the code, but it is not. It's the same reason why we opposed in the constitutional amendment of GST of putting a number. Though the basic idea of the proposal that GST should not be more than whatever 50 or 15 or 30 is a good one, but it cannot be in the constitution. So similarly, so that's the second. And the final point I would connect to the macro environment, which you asked me earlier. That again, given the economy is weak, this is one of the simplest and best ways of giving a huge boost to animal spirits. So it's a good time, and what we have been telling the government at various levels is that put the code in the public domain for discussion that will give hope to people if it is a good one, as we all hope that it is, and then enact it in the budget. It would be a big boost to the economy and would get rid of all this pessimism. So it's very important for macro. The key macro is not the fiscal deficit. It is this hope and animal spirits which would be created by having a good simple code which is passed in the next budget, say.
To boost the entire economic cycle.
The macroeconomy.
Right. Dr. Pandey, it is also expected that DTC would further propel ease of doing business in India by suggesting a uniform tax rate for both local and foreign companies. What kind of impact do you foresee on the investment environment?
Yes, that I already mentioned because of the mobility of capital and international context to tax policy. The differential treatment of foreign and domestic companies will have to be relooked, and the fiscal stability can be built into through long-term contracts. Again, coming back to the point of annuality of rates, it is embedded in our budget system. You see, our budget system is derived from the United Kingdom, and we started from 1210-15 Magna Charta, when we say no taxation without the consent of Parliament. So even now, the rates control of Parliament of the day on the taxation, it is an assertion of that, and it cannot bind future parliaments in it. But the way has been found by government in articulating long-term fiscal policy, medium-term fiscal outlook as part of the fiscal responsibility budget management, where you can give an indication that this is the direction of tax reforms. You can expect a predictable fiscal regime,
yes,
modest fiscal regime, which will attract investment today, and which will incentivize value addition, which will incentivize job creation. So ultimately, the whole purpose, if there is no income, what we will tax. So the first effort is to boost income,
yes,
to boost the base of wealth that creates incomes and jobs. And that is the guiding principle.
Last 30 seconds to you, Mr. Jain.
Just to clarify the issue which you are talking of, the foreign company and Indian company tax rate issue is, you see now 30% and 40% on the foreign company, there is a principle behind it. A foreign company which operates through a branch office is not required to pay tax on its dividend. Because when a foreign company operates through a subsidiary, then it has to pay the dividend. So there are two options available. That's why the foreign company, since it is not required to pay dividend, tax on dividend, so there is a higher rate available. And what I believe will be proposed in direct tax code is there will be uniform rate, maybe 30 or 25 for domestic as well foreign company. But then there will be a separate tax which we will call branched profit transfer tax. So in case the branch profit are transferred to the parent company, then it will be required to pay additional tax. In case they want to retain in India, then there is no tax, but if they want to take it away, then they need to pay extra tax. So this difference is mainly because of that dividend which a foreign company is not required to pay. That's why it is.
So we need more clarity on that. Yeah. Dr. Virmani, I have last 30 seconds on the show. How would DTC improve tax governance in India?
So the basic purpose is exactly to make life easy and predictable for taxpayers. That is the thing. And the second element which goes with that and why we want to do it is voluntary tax compliance. As the former secretary said, one of the most successful reforms has been the direct tax reform in the 90s. And if you look at the data, the direct tax as a proportion of total taxes increased progressively from after the reform. So what I would urge everybody is that tax reforms work, and that's the focus which must be there. And this is a great opportunity at this time to do what people used to call big bang reforms.
Absolutely. So on that note, thank you so much for joining us. So the focus is to bring the new direct tax code in consonance with economic needs of the country. That's all we had for you in this edition. Thanks for watching and stay tuned to Rajya Sabha Television.